What if I told you that having the right idea is not what separates elite traders from the rest? It's not the brilliance of the trade setup, the perfect timing, or the rare insight that makes the difference. No, it's how you handle that idea once it's live. That's the hard truth. And this is where you start to separate fantasy from mastery. You've probably heard that ideas are everything. In trading, this gets amplified. Newsletters, stock tips, analyst opinions. But in the art of execution, Lee Freeman-Shor dismantles this myth with cold, hard evidence. He managed over 45 fund managers across the globe, each with top-tier track records. He gave them all the same goal: invest in 10 to 20 stocks and hold them. The only difference was how they executed the trades. The result? Less than half of the managers were actually profitable. Yes, you heard that right. Brilliant minds, world-class research, access to institutional tools, and still more than half lost money. Why? Because trading success wasn't about ideas. It was about what they did once the trade started running. Have you ever broken your trading plan because of a red candle? That moment, that reaction, is the battlefield where profits are won or lost. Lee's findings echo the core principles in Mark Douglas's Trading in the Zone. You don't need to predict the market. You need to manage your reactions to it. Freeman-Shor discovered that managers who cut losses quickly, added to winners, and rode momentum were consistently profitable. Those who clung to bad ideas hoping for a turnaround, they bled capital. Let's put this in context. Think of your last few losing trades. Did you freeze, hoping the stock would recover? Did you double down on a loser because it was cheap? Or did you stick to your plan, take the loss, and move on? That decision process is everything. Freeman-Shor's work shows that edge lies not in what you know, but in how you behave. This cuts straight through the fluff. The mythology of the great trade idea collapses under real-world data. And this aligns beautifully with Jared Tendler's performance psychology approach. Confidence is not about being right. It's about being able to act decisively regardless of outcome. It's about process, not prediction. Discipline, not brilliance. The traders who thrived weren't the smartest. They were the most decisive. When a trade went against them, they didn't hesitate. They cut it. When a trade worked, they rode it. They had rules, and they followed them. As Tendler might put it, they removed emotion from execution. So, what can you do with this knowledge? You stop chasing ideas and start building an execution framework. You understand that your win rate doesn't matter nearly as much as your behavior during each trade. You train yourself to focus on how you act when you're in the trade. That's your edge. Your journal shouldn't be a shrine to entry setups. It should be a record of your reactions. Did you cut when you should have? Did you let a winner run or grab quick profits out of fear? These are the real metrics that tell you if you're growing. You are not in the business of being right. You are in the business of being effective. As Freeman-Shor's findings scream from every chapter, you must become ruthless with bad trades and relentless with good ones. Execution is your craft, and here's the kicker. The market doesn't care what your idea is. It cares about how you handle pressure. That's why great ideas are a trap. They lull you into overconfidence. They anchor you to the belief that you're right. But trading is not a courtroom. There's no reward for arguing your case longer. There's only price. And price is the judge, jury, and executioner. The sooner you internalize this, the sooner you free yourself from the illusion of perfect setups. You begin to work on what matters: your behavior, your discipline, your execution. Because that is what separates the assassins from the rabbits, the raiders from the Terminators. And you're going to meet them all next. Most people obsess over the strategy, the entry, the technical edge, but you're about to learn something that flips the game. According to Freeman-Shor, 5 archetypes emerged from his fund manager experiment. Only 3 were consistently profitable. The shocking part? They didn't have better ideas. They just had better execution behavior. Welcome to the core thesis of the art of execution. Imagine this: 45 fund managers given capital and freedom, operating under the same macro conditions. Each had pedigree, track records, and teams. Yet when Freeman-Shor compiled the data, performance didn't track intelligence. It tracked execution patterns. Out of 5 behavioral archetypes, only 3 made money consistently. And what defined them wasn't some hidden market insight. It was how they behaved once they were in the trade. This is where the book begins to cut deep. You're not just a trader, you're becoming a performer under pressure. Freeman-Shor introduces you to the assassins, hunters, raiders, connoisseurs, and rabbits, labels that reflect core behavior styles. Think of them as characters in your internal play. You already know which ones live inside you, but now you'll see them dissected by real performance metrics. First, meet the winners: assassins, raiders, and connoisseurs. Assassins cut their losses quickly, no hesitation. Raiders maximize winners, they press into strength. Connoisseurs, the rare hybrids, balance both. These were the ones who made money. Not sometimes. Consistently. Now contrast that with the rabbits and Terminators. The rabbits froze when trades turned red. They refused to act, paralyzed by fear or denial. The Terminators did the opposite. They acted too much, averaging down blindly, doubling their positions as price moved against them. Their downfall wasn't lack of knowledge. It was emotional response, masquerading as conviction. This is what you must understand. Execution is your edge, not just risk management, not just psychology. It's the decision tree in real time when your money is on the line. Freeman-Shor's entire project destroys the illusion that the market rewards intelligence. It rewards adaptation. It rewards self-control. Here's what the data shows. The most successful managers didn't always get the direction right. In fact, some had win rates lower than 50%, but they still made money. Why? Because they cut their losers fast and let their winners run. They didn't cling to the narrative. They acted in alignment with price. That's not strategy. That's behavior. The message echoes across trading psychology. In Brett Steenbarger's coaching, in Mark Douglas's work, in Mike Bellafior's Real Trader accounts, you hear the same drumbeat. Discipline is the system. You need a framework that survives not when you're confident, but when you're doubting everything. Let me ask you, when your trade goes red, what's your instinct? Do you hesitate? Just give it a bit more room? Do you look for confirmation bias, news, tweets, opinions to validate staying in? Or do you take action mechanically, decisively? That's the behavioral divergence that defines profit or pain. In The Art of Execution, Freeman-Shor doesn't just show the outcomes. He names the behavior. He gives you a mirror. When you read about the rabbit, the Terminator, you'll feel the sting of recognition. That's the point. This isn't just education. It's exposure therapy. And once you see it, you can't unsee it. Every trade you place becomes a test of behavior. Will you act like an assassin, a raider, or will you freeze like a rabbit? This is the shift. You stop thinking like a forecaster. You start thinking like a risk performer. The job isn't to be right. The job is to manage outcomes, to respond with control, to act with the market, not against it. This book doesn't hand you trade setups. It hands you accountability. You're going to see yourself in these profiles, and in doing so, you'll start to sculpt a version of yourself that executes with purpose, with clarity, with detachment. And next, you'll get to know the first of the elite, the assassin. Cold, clinical, precise. You're going to learn how cutting your losers isn't just good practice. It's the trait that defines every winner Freeman-Shor studied. You've been told to cut your losses, but do you actually do it? Do you do it every time? Now meet the assassin. In Freeman-Shor's world, this trader type doesn't hesitate. The moment the thesis breaks or the market speaks otherwise, they execute the stop. No drama, no second guessing. That's what turns a mediocre win rate into consistent profitability. The assassin is not emotional. They don't debate with the market. They don't argue with candles. They don't justify staying in with maybe it'll bounce or it's oversold. When the trade violates the predefined condition, they act fast, cold, like a machine. This isn't recklessness, it's strategic detachment. Freeman-Shor found that the assassins often had win rates no better than 40 to 50%, yet they made solid returns. Why? Because their losers were small, tiny in fact. The moment a trade turned against them, they cut it, often within days or weeks. That means no long, painful drawdowns, no account bleed. Their capital was protected and available for better opportunities. Let's be clear, this is not easy. It's brutally hard. You'll need to retrain your brain away from the comfort of maybe, because maybe is the most expensive word in trading. It keeps you tied to losers, hoping for reversal as your edge erodes tick by tick. The assassin skips maybe and moves to next. And here's the key insight. Cutting your losses isn't just about avoiding damage. It's about creating optionality. Assassins don't cling because they know that every dollar stuck in a bad trade is a dollar that can't ride a good one. They act with the understanding that survival is the goal and speed is the weapon. Freeman-Shor shares examples where a trader would lose on 7 out of 10 trades, but still come out ahead. Why? Because each loss was -5%, while each win was plus 30%, even plus 50%. That math only works if you're fast and consistent with your cuts. Letting 1 to 5% loss slip into a 9 to 20% hold destroys the system. Mark Douglas warned us, the pain of loss is amplified by uncertainty. But the assassin removes uncertainty. They have a plan, and they stick to it. There is peace in mechanical action, and that peace is what makes them dangerous in the best way. This mindset is echoed in Mike Bellafior's One Good Trade. Make the next best decision. That's it. Not the most clever, not the most hopeful, the next best decision. For the assassin, that means moving on. The trade no longer fits the criteria? Kill it, because they know that the market rewards clarity over cleverness. Now, ask yourself, how many times have you turned a small paper loss into a real wound? How often have you adjusted your stop, giving it more room? Every time you do that, you abandon the assassin and embrace the rabbit. You trade your discipline for hope. The assassin isn't cold by nature. They've just learned that emotion has no place in loss management. And this doesn't mean they don't feel. They just act before those feelings hijack execution. It's not easy, but it's learnable, and it's the core of real trading strength. Freeman-Shor's data showed that assassins would often exit and re-enter later. No attachment. They weren't afraid to get back in, but only when the setup made sense again. That flexibility, born from discipline, is a psychological weapon. It means you're never owned by your trades. To build this, start small. Practice exiting a trade as soon as it breaks your plan. Not after a 10% drawdown. Not after a full-body candle through support. Do it once. Then again, build the muscle. Write it into your system. If X, then exit. No questions. Say it like a creed. Over time, you become less reactive. More mechanical. You'll feel fear, sure, but you'll act anyway. And that's how you shift from emotional to professional, from fragile to unshakable, from average to assassin. The assassin makes you consistent. The assassin protects your capital. The assassin creates freedom. And just as importantly, you'll soon meet the second elite execution profile, the hunter. Unlike the assassin, the hunter adds to losing trades, but not emotionally, not blindly, with intention, with edge. You're about to learn how to turn buying the dip into a professional move, not a rookie mistake. You've heard that adding to losing trades is dangerous, and most of the time, it is. But the hunter plays a different game. This archetype doesn't average down blindly. They strike with precision when the odds shift in their favor. Freeman-Shor found that when executed with rules, the hunter strategy can lead to enormous outperformance. Think about it. What if instead of running from the red, you leaned in, but with intention? The hunter waits for the perfect moment to reload, not based on hope, not based on ego, but based on fresh data, a new catalyst, a redefined thesis. The hunter is patient, strategic, and never reckless. Freeman-Shor observed that some of the most profitable managers did something radical. They added to positions that were underwater, but only when their conviction was increased, not diminished. That's the paradox. Losing trades aren't always wrong trades. Sometimes they're early trades, and the hunter knows how to tell the difference. Here's how it works. A hunter buys a stock. It drops 10%. Most traders panic, bail out, or freeze. The hunter doesn't act yet. They ask, has the reason for the trade changed? Has the thesis been invalidated, or is the market simply mispricing in the short term? If a new catalyst emerges, if valuation improves, if technicals suggest a rebound with volume confirmation, the hunter strikes. They add, not because they're anchored to the idea, but because the odds have improved. That's a key distinction. The hunter adds when the risk-reward skews even further in their favor. This is not hope as a strategy. It's asymmetry as a strategy. You're increasing exposure because your information edge just got sharper. The hunter thinks like a poker player who sees the odds shift in their favor and doubles the pot. Not because they're behind, but because the math now demands aggression. But it only works when paired with ruthless discipline. The best hunters also cut quickly if the new thesis fails. They're not Terminators. They don't average down endlessly. They have rules. I will add once at this technical level and cut completely if it breaks below this. That structure is the difference between magnified returns and blown accounts. This is the kind of nuance you rarely see in trading books. Freeman-Shor dives deep into how hunters executed this: layered entries, catalyst stacking, and real-time reevaluation. One manager, for example, bought into a biotech firm ahead of trial results. The stock dropped on broader sector weakness, but no negative data had surfaced. The manager added, weeks later, the results were released and the stock soared. These moves don't come from gut feelings. They come from process. Just like the assassin has a cut and move rule, the hunter has a double if the edge improves rule. It's systematic, and that's what gives it power. Let's bring in some psychology. From a Tendler perspective, hunters are masters of confidence under pressure. They don't freeze. They don't lash out. They reassess, adapt, and act. From a Douglas standpoint, they accept risk as inherent. They don't seek control. They seek opportunity. That mental game is what turns averaging down from amateur move to advanced strategy. So what can you do with this? First, stop averaging down unless you've earned the right. That means having a clearly articulated, data-backed reason why this trade has more edge now than before. If you can't explain it, don't do it. Second, set rules, predefined levels, size limits, timing conditions. Hunters are calculated, not hopeful. In your journal, log every add-on trade. Did the conditions improve or just feel better? Was the size within risk parameters? Did you define the new invalidation point? Over time, this creates a feedback loop. You get sharper, more clinical, less reactive, and most importantly, you gain confidence, not in being right, but in acting with logic. The hunter doesn't fear red. They use it. They know that mispricing is opportunity, but only if you stay alert. So now you've learned how the assassin cuts and the hunter adds. But what happens when the market gives you profit instead of pain? That's when the raider steps in. Because there's one type of trader who truly thrives when they're right, and they don't just sit on gains. They strike harder. You're told to let winners run, but do you? Most traders take profits too early, afraid to lose what they've got. Raiders are different. They see strength and press the advantage. Freeman-Shor's raiders weren't content with a quick win. They aimed to maximize every successful trade, scaling in as the trend confirmed. This is where your instincts start to betray you. The moment a trade goes green, fear sets in. You're relieved. You want to lock in the gain. But that's not what the raiders do. They don't play not to lose. They play to win big. And when they're right, they get aggressive. Freeman-Shor observed that the most successful traders didn't just let their winners run. They increased their exposure as the market confirmed their thesis. They weren't afraid of giving back some profit because their focus wasn't on being comfortable. It was on compounding conviction. Imagine you're in a trade that's up 15%. You see clear momentum, fundamentals align, volume surges. What do? Take the win or go deeper because the story just got stronger. The raider adds, not recklessly, but strategically. They pyramid up, size into the move, and ride the trend. This isn't bravado. It's mastery of trade psychology. It's knowing when to hold, when to press, and when to get out of your own way. Here's what makes this powerful. A raider can be wrong 60% of the time, but when they're right, they crush it because they squeeze every drop from the move. One win, managed like this, can make up for multiple small losses. This is asymmetric thinking. This is the edge you never hear about in entry-obsessed communities. Mark Douglas said it best. The market is never wrong in how much it can move in your favor. Most traders sabotage that potential. Raiders harness it. In Freeman-Shor's study, one raider consistently added to positions once they broke out of consolidation with fresh news backing the move. He didn't predict the breakout. He waited for it. Once confirmed, he loaded up again and again. The result? Massive outperformance, not because he had better picks, but because he executed with boldness when the time was right. Let's bring this to your screen. Are you selling early because you're afraid of reversal? Or are you building a framework that allows you to scale in on strength? The raider doesn't act emotionally. They act tactically. They track volume, momentum, news catalysts. They scale not on hope, but on confirmation. And yes, this takes confidence. But it also takes rules. Freeman-Shor's successful raiders didn't wing it. They had predefined criteria for when to add: technical levels, percentage thresholds, volatility filters. They weren't chasing, they were calculating. Here's your practical takeaway. Write a rule. If a trade moves X% with Y volume above resistance and Z catalyst confirms, I add 25% of position. Make it mechanical. Build the raider muscle. Also, journal the pain. Look at how often you exited a trade, only to watch it fly another 20%, 50%, even 100%. That's not regret. That's data. It's feedback. The market is teaching you how to trust the move. From Jared Tendler's lens, this is about confidence in execution, not an outcome. You don't know how far the trade will run, but you do know how to follow strength. That's the Raiders' gift. They don't fear momentum. They harness it. And that's what you must learn. Letting winners run isn't passive. It's active. It's bold. It's skill. The Raider doesn't hope for gains. They go get them. You now understand 3 elite behaviors. The assassin cuts, the hunter reloads, the Raider presses. Each uses price as signal. Each stays present. Each acts with purpose. But what happens when these styles mix? When a trader blends discipline with aggression, that's when you meet the connoisseur, a rare breed who adapts to the moment. And if you can master this hybrid style, you might just become unstoppable. The connoisseur doesn't just follow one pattern, they adapt. Freeman-Shor's most consistent performers were often connoisseurs, traders who combined the assassin's discipline with the raider's aggression. Their strength? Knowing when to cut, when to hold, when to double. Their art was execution without ego, blending styles to fit the trade. And that's the key: flexibility without fragility. The connoisseur doesn't marry a method. They align with what the market offers. They know when a trade requires brutal precision, assassin mode. And they sense when the odds demand escalation, raider mode. This ability to shift gears without emotional drag is what sets them apart. In Freeman-Shor's research, connoisseurs didn't outperform in dramatic spikes. They outperformed through consistency. They rarely had huge blowout trades, but they almost never had huge drawdowns either. That's what makes them dangerous in the long game. They survive, they adapt, and they compound. This is the trader you want to become. Here's how it works. Say a position dips 5%. The connoisseur assesses. Not emotionally, not with bias. They ask, is the thesis broken? No. Then, do we add or wait? Is the setup improving? They operate through a checklist, not gut feel. Their system is agile but grounded. And if that same trade jumps 20%, the connoisseur shifts again. Do we press this? What does the volume say? Is the catalyst still strong? Or is this a parabolic stretch ready to collapse? They decide based on structure, not excitement. This hybrid style isn't for beginners. It demands self-awareness. You need to know when your discipline is slipping. When you're being cautious because of fear, not logic. When you're being aggressive out of greed, not edge. The connoisseur constantly filters their own psychology. Think about the mental clarity this requires. You're not reacting, you're recalibrating. Like a pilot adjusting to turbulence without panic. Like a surgeon shifting tools mid-procedure based on what the body needs. That's why Freeman-Shor gave them that name, connoisseurs, because they operate with taste, with calibration, with nuance. But don't mistake this for indecision. Connoisseurs don't hesitate. They act. The difference is, they act with context. And this is where you see echoes of Bellafior's teachings. Elite traders at SMB Capital aren't locked into one style. They develop playbooks. They know how to switch from breakout to fade, from scalp to swing, depending on what the market presents. The connoisseur builds a toolkit, not just a weapon. And that's your call to action here. Stop worshiping a single style. Start journaling your trades through multiple lenses. Was that a moment for an assassin cut? Did you miss a raider press? Did a hunter reentry make sense? Practice identifying which mode the trade called for. This is how you develop adaptive skill. You no longer trade by rules alone. You trade by principles. Your decisions gain depth. Your execution gains sharpness. From a Tendler performance model, connoisseurs are emotionally regulated. They don't chase dopamine hits. They chase execution fidelity. They review their trades not for the P&L, but for the process. So how do you become one? First, master the pure forms. Be an assassin first. Build that reflex to cut. Then develop your raider muscle. Learn how to press a winner. Only then should you attempt the blend. Because hybrids that aren't grounded in fundamentals become noise traders, reactive, unfocused, drifting from plan to plan. That's not a connoisseur. That's confusion. The connoisseur is not half of everything. They are the best of everything. They learn from every style and build a unified approach. This isn't a strategy, it's an identity, an execution identity. And if you get this right, you start to flow with the market. You stop trying to control it. You stop needing certainty. You start thriving in movement, adapting your actions to what the trade needs, not what your emotions demand. But for every connoisseur, there are 100 traders trapped by fear. They don't cut. They don't press. They just watch paralyzed. You've seen them. You've been them. They're called rabbits, and they're next. You know the feeling. A trade goes against you, and instead of acting, you freeze. That's the rabbit. Freeman-Shor found that rabbits rarely made money. Why? Because they refused to take losses. They avoided pain, and that emotional avoidance turned manageable setbacks into portfolio wrecks. The rabbit is the costliest trader of all. The rabbit doesn't lack intelligence. They lack action. And that's the danger. These traders watch their positions fall 5%, 10%, 20%, and they don't move. They tell themselves it'll come back. They avoid looking at the position. They hope. They rationalize, and they wait, powerless in their own capital destruction. Freeman-Shor was shocked to find how common this behavior was, even among professional managers. Given freedom and capital, many simply froze when trades turned red. They weren't lazy. They weren't foolish. They were emotionally overwhelmed. Instead of executing, they avoided. And the cost was catastrophic. This behavior mirrors something Mark Douglas warned us about. The mind recoils from pain. And in trading, that pain comes from being wrong. But the need to avoid emotional pain becomes a form of self-sabotage. It paralyzes you. And while you're stuck, the market keeps moving further and further away from your entry, your plan, your control. Have you ever stared at a losing trade, hoping the next candle would be green? That's the rabbit moment. The longer you wait, the more you anchor. And the deeper the loss gets, the harder it becomes to accept. The rabbit doesn't take a -5% hit, they take -30%. And by then, the damage isn't just monetary, it's psychological. Rabbits operate without a system. Even if they have one, they don't use it. They break stops, they delay decisions. Their fear becomes their process. And because they avoid pain, they compound it. This is where Jared Tendler's work hits hard. Emotion comes from the accumulation of unresolved mental mistakes. Rabbits don't have mechanisms to process their fear or shame, so they suppress it. They think if they ignore the trade long enough, it'll resolve itself. But it never does. In fact, it often gets worse. Freeman-Shor found that rabbit behavior wasn't just unprofitable, it was destructively persistent. Once a manager fell into this pattern, they repeated it, again and again. One bad trade triggered another. Soon, their portfolio was filled with losers, hope trades, dead weight. You need to understand this clearly. Freezing is not passive, it's active harm. Every second you delay action, you're letting fear run your account. And fear is the worst fund manager you'll ever meet. To break this pattern, you need rules. But more than rules, you need accountability. That means journaling the feeling of freezing. Write it down. What stopped you? What story were you telling yourself? Did you hear the inner voice saying, "It'll bounce"? That's your rabbit talking. Name it. Then start micro-conditioning the opposite behavior. Enter trades with predefined stop losses and obey them, even if they're tiny. Exit on principle, exit to practice, because every clean cut is a small psychological win. It rewires you away from paralysis and into motion. And motion is power, because inaction is what feeds doubt, but action builds confidence, not just in the market, in yourself. Every time you cut a loser without drama, you kill a little piece of the rabbit inside. Freeman-Shor's evidence was clear. Rabbits failed not because they picked the wrong stocks, but because they didn't do anything when they needed to. They froze in moments that demanded precision. They surrendered to emotion when the market demanded clarity. Don't let that be you. And if you recognize rabbit traits in yourself, don't hide from them. Study them. Use them. Because every weakness, once understood, becomes an entry point for growth. The assassin was a rabbit who learned to act. The raider was a rabbit who learned to trust strength. The connoisseur was a rabbit who built awareness. So the next time you freeze, remember this. Doing nothing is a decision. and it's the most expensive one you'll ever make. But as dangerous as the rabbit is, there's another type, one who does act, but recklessly. The Terminator. This trader doubles down, blinded by ego, and you'll meet them next. Now meet the most dangerous archetype of all, the Terminator. This trader doesn't freeze. They act, but they act blindly. Freeman-Shor found that Terminators averaged down into losing trades again and again, convinced they were smarter than the market. Their ego wrote checks their capital couldn't cash. The Terminator isn't paralyzed like the rabbit. No, they're confident. Too confident. They believe that if they just keep buying, eventually the market will agree with them. They see red and say, good, more at a discount. And they keep loading up until the trade blows up. This is the illusion of control. The Terminator thinks they're being tactical, but they're not. They're being emotional, masking it with aggression. Instead of assessing new information, they double down on their original thesis. They defend it, argue it, cling to it, even when price, fundamentals, and sentiment all scream otherwise. Freeman-Shor's data made it clear. Terminators often had the most explosive losses. Their average position size ballooned as the stock fell. One wrong call could ruin their entire quarter, sometimes their entire year. And it wasn't a knowledge issue. It was identity. They needed to be right. Sound familiar? Have you ever said it can't go any lower? That's Terminator thinking. Have you ever watched a losing position eat 40%, 50%, 70% of your account because you kept adding? That's the Terminator loop. It's not bravery. It's delusion. And this archetype is everywhere, especially in newer traders who mistake conviction for skill. They confuse position sizing with confidence. They tell themselves, if I liked it at $50, I should love it at $40, $30, $20. But that logic only holds if the trade still has edge. And that's almost never the case when price is collapsing. Let's get clinical. What's happening here is ego attachment. Jared Tendler calls it identity interference. When your sense of self gets tied to a trade idea, you stop managing risk. You start defending your ego. And that leads to behavior that feels powerful, but is actually fragile. Freeman-Shor shared one story of a manager who bought a tech stock at $90, added at $70, again at $50, and one final time at $30. The stock bottomed at $10. The manager's fund never recovered. Not because the stock was a bad idea originally, but because he refused to accept that the market had changed. This is the pattern: denial, reinforcement, collapse. The Terminator repeats it over and over. They don't cut losses, they escalate them. And by the time they admit defeat, the damage is irreversible. So how do you escape this trap? First, admit that every trade is fallible. No matter how strong your research, how clean the setup, how confident you feel, you might be wrong. That doesn't make you weak, that makes you adaptable. Second, build rules that limit additions. For example, I will never add to a losing trade unless a new catalyst emerges and technicals confirm strength. Not because it's cheaper, not because I believe in it, only if the thesis is updated and improved. Third, embrace stop losses, not just as capital protection, but as ego protection. A small loss now prevents an identity collapse later. It protects your focus, your confidence, your ability to play the next hand. And finally, journal every time you feel the urge to average down. Ask yourself, is this hunter behavior based on new data and structure? Or is this Terminator behavior based on stubbornness and fear of being wrong? There's a fine line between courage and self-destruction. The Terminator doesn't know where it is, but you must. The market does not reward ego. It rewards adaptation. It rewards humility. It rewards traders who know when to strike and when to surrender. Freeman-Shor's findings weren't just about money. They were about behavior. And the Terminator embodies the cost of unchecked emotion, wrapped in the armor of false conviction. But now that you've met all 5 archetypes, it's time to pull the thread together, because knowing these profiles is just the start. Next, you'll learn the lessons, the universal truths that define real trading success. Lessons from the trenches. 5 archetypes, 2 failures, 3 winners. Freeman-Shor's research exposes one brutal truth. Ideas don't matter if execution is broken. You're about to extract the key lessons from across every trader type, and when you see the patterns, you'll understand. The best don't predict. They adapt, cut fast, press strength, and never freeze. This is the part where it all crystallizes. Freeman-Shor's fund managers weren't amateurs. They were elite, well-trained, experienced professionals. Yet over and over, the same behaviors determined outcomes. The ones who treated execution as a skill, those were the ones who outperformed. Not because they had better access or smarter research, because they were more consistent in what they did after the trade was live. The number one lesson? Cutting losses fast is non-negotiable. Assassins dominated not because they avoided red trades, but because they refused to let red become ruin. It wasn't emotional. It wasn't personal. It was systematic. This trade is no longer valid. Cut it. That's how real pros behave. They trade the next candle, not the last. The second lesson, press your advantage. Raiders outperformed by capitalizing on momentum. When the market confirmed their thesis, they didn't retreat. They doubled down, but only after confirmation. That's key. They weren't guessing. They were responding. It's the difference between chasing and compounding, between luck and leverage. The third lesson, flexibility wins. Connoisseurs mastered the art of adaptation. They knew when to flip from assassin to raider, when to pause and reassess, when to go aggressive or conservative. They used structure as signal. They kept ego out, and because of that, they were the most consistent performers over time. And then the warnings, the rabbit and the Terminator. The rabbit shows you what happens when fear rules. No action, just paralysis. No cuts, no additions, no scaling, just watching capital bleed. It's the passive destruction of account and confidence. And it's more common than you think, because freezing feels safe until it's not. The Terminator, on the other hand, shows what happens when overconfidence becomes a trading style. Aggression without structure, conviction without risk control. The idea might be right, but if execution is wrong, it doesn't matter. Freeman-Shor's Terminators often ended in ruin, not because they lacked insight, but because they lacked humility. So what's the real takeaway here? Your trading success isn't about finding the perfect trade. It's about executing imperfect trades perfectly. That's the real edge. That's what separates you from the masses. Look across all 5 profiles and a clear pattern emerges. Assassins accept being wrong, quickly. Raiders act when they're right, forcefully. Connoisseurs move between both, fluidly. Rabbits refuse to act, fatally. Terminators overact, self-destructively. This has nothing to do with strategy. It has everything to do with behavior. And that's what most traders miss. They obsess over indicators, setups, news. But execution, that's the part they leave to emotion. And that's why they lose. Freeman-Shor's work is a masterclass in behavioral finance. It validates what Douglas, Tendler, Bellafiore, and Steenbarger have all preached. Trading is a mental game, a behavioral game, a game of execution. Your job isn't to predict the market. Your job is to manage what you do in response to it. And that's the lens you must now look through. Not, was this a good idea, but did I handle this idea well? That distinction changes everything. Journal every trade with this focus. Not just entry and exit, but how you behaved. Were you present? Were you reactive? Were you decisive? Were you honest with the evolving evidence? Because in the end, your P&L is not a reflection of your intelligence. It's a reflection of your behavior. Freeman-Shor gave us something powerful, proof that the true edge isn't in knowing more. It's in doing better. And now, we bring it home. In the final section, you'll learn how to apply all of this, how to build your execution identity, how to stop being reactive and start being ruthless, like the winners. It's time to decide who you're going to be. This is the moment you stop dabbling and start defining. Freeman-Shor's profiles give you a framework to build your trading identity. Execution is a skill. Behavior is your edge. Your job now is to choose. Will you be a rabbit or an assassin, a Terminator or a Raider connoisseur hybrid? The blueprint is right here. This isn't about information anymore. You know the profiles. You've seen the consequences. You've felt the reflections in your own journey. Now, it's about commitment. Who do you want to be when your money is live and the chart goes against you? Who do you become when you're up 25% and your hand's on the sell button? Let's build your identity from the inside out. Start with a clear rule. I will cut my losses fast. That's non-negotiable. No trader becomes consistent without mastering the assassin's first move. Write it, say it, burn it into your process. You're not allowed to wait and see. You either have a reason to stay or you don't. No middle ground. Next, write a second rule. I will add to strength only when price confirms and context supports. This is the Raiders' DNA. You let the market show you momentum, then you lean in. You never chase. You scale methodically. This is where your winners become meaningful. One trade that runs 40% with scale can outweigh a dozen small losers. This is math on your side. Now blend the two. When a trade begins to evolve, either into a breakout or breakdown, you respond, not react. You adapt. You use the connoisseur's logic to shift between cutting and pressing, always based on new data. Not emotion, not gut. Evidence. And what about the hunter? You earn that role only when you've proven your objectivity. If a losing trade improves on paper, fundamentally or technically, you may re-enter, but only if the story has changed. Otherwise, you walk. You don't average down. You re-enter on new terms. Then, most importantly, confront the rabbit and the Terminator in you, because they are always there. The rabbit waits to freeze. The Terminator waits to strike from ego. Your job is not to eliminate them. It's to outvote them with discipline, with pre-committed actions, with your execution identity. This identity is more than labels. It's muscle memory. It's training. You build it through journaling, through trade reviews, through conscious practice. Each trade you log isn't about profit. It's about behavior. Did you act like the version of yourself you respect? Or did you fall into avoidance or aggression? Write post-trade affirmations. I acted like an assassin on this stop. I pressed strength like a raider. I paused and reassessed like a connoisseur. When you track these, you develop self-awareness. You build consistency. You gain trust in yourself. Freeman-Shor's findings are more than a case study. They're a map. They show you that even elite professionals fall if their behavior isn't aligned with their strategy. You now have what they didn't, the blueprint laid bare. Here's how you move forward. 1. Define your execution identity. Assassin, raider, connoisseur, or blend. Know it, own it. 2. Build a system around it. Hard rules, measurable actions, zero guesswork. 3. Track behavioral compliance. Review execution, not just results. Process builds profit. 4. Study the traps. Recognize rabbit and Terminator traits early. Stop them fast. 5. Act with intention every trade. Don't wing it. Execute like it matters, because it does. Your job isn't to be perfect. Your job is to execute flawlessly based on what the trade requires. That's your real edge. That's the lesson behind every profile, every trade, every chart in the art of execution. You're no longer hunting for setups. You're sculpting behavior. You're building a professional mindset. And now, your decisions will match your ambition. Because now you know, the market doesn't care what you think. It only responds to what you do. So decide, define. You've traveled through every archetype in the art of execution. You've seen how the assassin cuts fast, how the raider presses hard, how the connoisseur blends the best of both. You've stared down the traps of the rabbit and the Terminator. And now you hold the keys to your own execution identity. This book isn't theory. It's a behavioral mirror. The data doesn't lie. Execution is what separates consistent profitability from chaos. The real edge is not what you know. It's what you do, over and over. So start small. Define who you are. Build rules. Track yourself. And show up every session with the mindset of a professional, not a predictor. A trader who adapts, not reacts. Who executes, not hesitates. Read this book again, but this time journal your behaviors. Note the patterns. Commit to the identity you want to be. Execution isn't the final piece. It's the whole game. If this breakdown helped you, like, comment, and subscribe for more deep dives into trading psychology. Share this with someone still struggling in the emotional loop. And remember, your next trade doesn't start with a chart. It starts with a decision. Execute like it matters. Because it always does.